Good evening, traders and investors. Will back here with another one, coming to you with a Wednesday market recap. Hopefully you guys had a very decent day in the markets today. And in today's action, well, we got a bit of a sell-off, a broad market sell-off. The broad market has been fairly strong as of late, but today was definitely not the case. Now, the only thing holding up the markets today, because most of your sectors were indeed in the red, were your trillion-dollar companies. Taking a look at the heat map here, Microsoft, NVIDIA, Google, Amazon, and Eli Lilly. So not all of your multi-trillion-dollar companies holding up the market, but if you didn't have these, you would be down, suffice to say, significantly more. You can see the equal-weighted S&P was down about 1.12% today, and broadly speaking, the market was a little bit soft, and there's a few things to kind of keep in mind. Number one is that was largely because of the unfavorable JOLTS jobs reports that came in this morning, and we missed the mark by about 450,000 net new jobs being added to the economy overall, in terms of just your opening positions. So that definitely left a lasting impact on the markets. We opened up fairly all right, and then we kind of just eroded slowly all throughout the day, right? We kind of had a bit of a pop and then just kind of unraveling here as potentially traders and investors taking profits into the rest of the big jobs reports for this week. I'll remind you, these are the volatility catalysts on the table, right? Today was part one. Tomorrow we get part two with the Challenger jobs report. And then part three, arguably the biggest part of them all, comes on Friday when we get the non-farm payrolls. And keep in mind, additionally, on Friday, we do get the Supreme Court's initial rulings as to the legality of the Trump tariffs. So that whole situation could also bring a bit of volatility into the Friday session. But jobs should be front and center across everybody's minds right now, because we know that inflation is no longer a problem, right? True inflation index sitting at about 1.73% right now. So we know that 2026 is not going to be a year in which we struggle with inflation or in which inflation becomes a concern for the markets. But whenever we have these weeks with the jobs reports, you got to be a little bit careful. And unfortunately, today was a bit of an unwind, still in the context of healthy daily uptrends, of course, but definitely a broad market day of overall weakness. So we're going to talk about it. So in today's video, we're going to do a few key things together. Number one, we're going to go over a few key news reports that came out today that I think could be relevant to our analysis. So we'll do that first. Part number two, we're going to go through our rotation, take a look at the S&P, the Qs, and some of the minor sectors to see what exactly happened today, where is the remaining strength, and are the overall markets still healthy. Thereafter, we will get into our big tech names overall. As you can see, the big tech landscape was slightly mixed. However, if everything was down, you'd be down significantly more across the indexes. So it's nice to see a little bit of rotation into these big tech names, even though you didn't have the entire rest of the market today. So we'll take a look at these names and derive which one or several of these names could be nice opportunities into 2026 still. And at the very end of the video, we'll go through the biggest gainers and losers of the day. Of course, there were many, a lot of high volatile names on the lows, a lot of high beta names on the lows as well. There weren't that many gains printing some highs, but we did have one sector here coming alive a little bit today after doing nothing for the past few months. And that, of course, was cybersecurity. So a lot of key themes remain in 2026. And I'll remind you, if you haven't seen Monday's video about the key themes and trades to pay attention to and how I'm playing them, right? Go watch the Monday video. I spend like a lot of time, like 40 minutes, describing which themes that I'm most interested into 2026. And that's going to be it for today's video. So let's jump right into the action, shall we? So the S&P down 0.32, the Qs actually holding up at 0.1. But as I already showed you, the heat map was quite dire today. Many more names declining than advancing, that's for sure. Thank goodness for big tech and even Eli Lilly and some of your pharmaceutical names, because if not, you'd kind of be down a whole lot more. Now, software didn't have that bad of a day, though. A special shout out to them. But financials, very soft, right? Certain portions of healthcare remain very soft, namely the health insurance providers. And then the bottom half of the market really struggling a lot today. This has been a segment of the market that's been pretty good since, let's say, December, right? Providing a bit of strength to the market, whereas big tech has been lacking as of recently. But today, they did not have strength at all. Defensives, all down across the board. Many industrial plays down multiple percentage points. Usually these don't move like this. So it's notable to us when they come down 3-4% pop. And then real estate, utilities, and even energy and basic materials all suffering the same fate, unfortunately, just slowly unwinding progressively more and more all throughout the session. Take a look at the one-day relative performance. You can see that even better to where only healthcare and communication services made it out alive. Everything else kind of slowly declining to the downside here. The worst performer of the day, of course, was utilities, followed closely by industrials and financials. Financials has been doing a great job upholding the SPY recently, but just taking a bit of a breather today. Your 1 week relative performance still remains slightly balanced, as we do have a slightly mixed market. To the downside, defensives, utilities, real estate, and energy. To the upside, still materials, healthcare, industrials, and cyclicals, but the minerals and the materials were kind of nowhere to be seen today, as it was a broad market day of sell-off, right? Gold down on the day. Take a look at SLV. SLV was also down on the day, and even some of your crypto names were down. So it was really a factor of a multi-asset downswing in terms of just a few key sectors. No, today was a bit of a day of everything, and largely that is due to the jobs report. Your fear and greed index still sticking in neutral, right? This neutral area has been very sticky. We have not mounted into the greed nor extreme greed categories. And I would say at this point in time, approximately 2 months. It's either been extreme fear earlier in late October into early November. Then we got fear for a very long time. And now we've been kind of stuck into neutral, as many different conflicting pieces of data are preventing this one from running into greed. We're okay in terms of distance from the moving averages. Stock price strength, though, has been a bit challenging, as we know that recently, guys, we've basically been stuck in this very awkward trading range, right? Ever since the month of December. I mean, we have a nice uptrend recently, but are we really expanding to the same effect as we had April through October? Not really, right? It's just been this kind of tightening, awkward range, slightly under 700 for the S&P. And the same thing on the Qs, right? Just a very wide tightening range, not much trending action. You've seen some names perform very well amidst this lack of trend, but broadly speaking, we don't have the same amount of juice that we possibly had from the April to October season. And I'm probably not expecting us to have a big breakout unless we get very, very favorable jobs reports tomorrow with the Challenger report, and Friday coming into the non-farm payrolls as well. So keep that in mind. But before we do more technical analysis on our indexes, guys, let's jump into some news articles that I thought would be interesting to bring up today. Number one, there's a few key things out of the Trump administration today. Number one was this piece of news in the after hours, increasing the military budget for 2027 from $1 trillion to $1.5 trillion. And you might remember in the Monday video, and even yesterday, we were talking about defense corporations, not consumer staples, but actual military defense corporations, still remaining a key theme into not only this year, but also next year as well. We know that President Trump has made a mission of increasing military budget spending a lot as part of the big beautiful bill for 2026, and now increasing that even further into the next calendar year, 2027. So I do believe that defense stocks can be very interesting to pay attention to very closely over the next 6, 12, 18 months. Moving on a little bit further, another release from the White House today, President Trump announcing steps to ban large institutional investors from buying single-family homes. People live in homes, not corporations. And this is, of course, as part of the affordability push into the midterm election year, because we know that affordability, especially housing affordability, is a big talking point for the average consumer. As a result, you have several corporations that are involved in the purchase of retail family homes, such as Open Door was down 11.7%. Even a company like BX was down pretty big over the course of the day today, and several other key corporations that have exposure to the small retail market getting hit today. Very good for the consumer, very bad for you if you're invested in some of these stocks. Just something to pay attention to. Moving on a little bit further here, U.S. investment grade dollar bond sales hit $88.4 billion this week. Very nice performance for blue chip bond sales. Now, this is important because we know late in November, early December, there was a lot of talk about, well, what is the stance in terms of creditworthiness of many businesses in the U.S. economy, especially large corporations funding a lot of the AI build out with debt. Well, here we have another big piece of data saying that Wall Street is still bullish and still buying bonds and a lot of these blue chip stocks. Maybe not so much these small and mid cap players that are somewhat extended in terms of their debt levels, but a lot of the money being raised in terms of debt capital funding for the AI infrastructure build out specifically should be pretty good, right? That being said, we got to pay attention to some of the proxy plays for a lot of these bond purchases and possible bond re-ratings over the course of this year at two companies that do such credit rating services, SPGI and Moody's. Now you guys understand why these are kind of front and center for me in terms of building out positions, because there will come a point in time where these will break out and we will not be able to buy them any longer. Moody's Corporation and a company like SPGI, arguably the duopoly, right? They have been stuck in a trading range now for arguably the past year and a half. Eventually, though, we will start trending again, and eventually we won't be able to buy these anymore. So rather than focusing on companies that are raising capital and determining their credit worthiness in terms of the credit default swaps and things like that we've seen with Oracle and things of that nature, right? Well, we can actually play the rating agencies, just a second order of thinking when you're thinking about anything related to corporate debt. Moving on further, Costco with some December sales reports, that's very important for the health of the consumer, and of course, especially during the holiday period season. Now, that being said, you can take a look at some of the numbers here. Very strong numbers for the 5-week period, which started early December and ended on January the 4th. US sales 6% higher, Canada 8.4%, international 10.6%, total company 7%, and e-commerce 19%. Very strong numbers out of Costco overall. Shows that at least a certain segment of the consumer that Costco caters to, basically the middle income consumer and also higher tier income consumers, are still very healthy. Now, that doesn't solve the issues with the K-shaped economy, the bottom half of the consumer not performing too well, but at least the middle and the top end is holding up. And that's kind of what you need to carry us into early 2026. Costco, still a very decent bet. I've been adding a little bit of Costco shares, nibbles under the $900 range, and I will continue to do so if it does keep giving me these opportunities through the lower 800s. Moving on further, this one right here, JP Morgan reaching a deal to take over Apple's credit card program from Goldman Sachs. This one was kind of up in the air for a better part of the last year, and now JP Morgan will actually be the one taking these deals. That being said, they are also potentially going to launch an Apple associated savings account. And this matters a lot for Apple, especially because Apple's moat is keeping users within the ecosystem. They don't make the best phones. They may not have the best hardware devices. That's debatable, obviously, in terms of specs versus other competitors such as Samsung or other players as well. But what they do have is a very solid and sticky ecosystem. So it's nice to see JP Morgan picking up the deal for the credit cards from Goldman Sachs and possibly adding to that a nice little new Apple savings account to really keep people locked into the Apple ecosystem. Moving on a little bit further here, Anthropic hitting the news again, raising another $10 billion in pre-IPO capital for a $350 billion valuation. That is nearly 2x from the last time we spoke about this about a month ago or 2 months ago. 183 billion was the previous valuation. The AI trade still remains very strong. Companies coming into the market getting extremely solid valuations. And I'll remind you, some of the biggest IPOs this year could indeed be Anthropic, OpenAI, and even SpaceX. Moving on a little bit further now to our next one. Here we got some news pertaining to Netflix. Warner Brothers Discovery saying its board of directors unanimously rejected Paramount's amended tender offer, saying it's not a superior proposal versus the existing merger deal with Netflix. Citing as well that if they were to take Paramount's offer, it's going to trigger about $4.7 billion of costs, including a $2.8 billion Netflix termination fee and flagged financing risks, since Paramount would need $95 billion of debt and equity, and that would be $50 billion for them of new debt. So potentially Netflix is going to walk away with this deal. It didn't tremendously help Netflix's share price today, but at least we are one step further towards the conclusion of this ordeal and all of the noise that's been plaguing Netflix stocks since then. So pay attention to this, guys. Moving on a little bit further here. This is very important, and it comes into, this is why I kept it for last. It ties into what we've been saying. You guys may have noticed that over the past 2-3 months, as we covered the charts from Big Tech, it's been very lackluster performance. Not too many trends from a lot of the big tech names. Now, there are some exceptions, like Apple had a very good end of November into December. Google still remains very strong. They also had a beautiful November into December. But what about the rest, right? And not only large cap Mag 7 tech, but also several ranks under, right? You might remember Broadcom coming down after earnings and doing a whole lot of nothing. Oracle's just been perpetually down since the month of October overall. That's a very large cap company, a $500 billion company, and even a company like AMD, right, which is additionally a $340 billion company, has done nothing since the highs of October. No real trends, but specific to Mag 7 names. Amazon, although doing something now, has done a whole bunch of nothing, right? Not much trending action right there. Meta, same concept, no uptrend right there. Microsoft, same concept, doing nothing since the end of October either. Netflix, we just talked about it, but also doing absolutely nothing since October. Not that they were doing much since the highs of the month of June, though. And even the biggest player of them all, NVIDIA, even though we've had a slight little upswing here, we cannot really call this a trend like we saw from April through October nevertheless. Now, there is the X factor in Tesla, which is also a $1 trillion company right now, but they've kind of fallen off since December as well. And largely, other than this breakout and this breakdown, we can say that most of the price action has been consolidated in this very same range, 460 to about 420 since the month of September. So you can clearly see there's a lack of trend. And we've been talking about this rotation out of big tech into the rest of the market, which was the catalyst for the overall market expansion. We keep bringing up these breadth indicators overall, guys. We talk about them almost every single video, how the S&P printed two different all-time highs. The all-time high back in October, which was a very poor all-time high in my opinion, because market concentration was very high. It was big tech and AI-specific names versus the entire rest of the market, and your breadth indicators, such as the percentage of stocks above their 20-day EMA, we were all the way down here. Percentage of stocks above their 50-day EMA, we were all the way down here, and percentage of stocks above their 200-day EMA also clipping in to some lows early or late October into early November as well. Since then, the breadth of the market has significantly improved. You have several other sectors that have done wonderful things since then. Sectors such as financials, which has really found some lift since November. Sectors such as healthcare, which have also really found some lift since November and into December as well. And just overall broad market participation. And that brings me into our last piece of news here. Since October 29th, the exact dates that we've been referencing in the past minute or so, Bloomberg's Magnificent 7 gauge is down about 2%, while the S&P 493 is up about 1.8%. And we talked about this in Monday's video about the key themes for 2026, saying that yes, the Mag 7 and large cap tech will still be a probably very good trade, but we can now finally find some opportunities in the rest of the 493 if you know where to look. The Defiance Large Cap X Magnificent 7, so without them, has now seen 6 straight months of inflows to end 2025, with December inflows roughly 4 times that of the month of November. This is very important, right? This is X Mag 7, so excluding Magnificent 7. Look, it was all about Mag 7 from arguably January through October of last year, right? And now, since October, November, December, look at these inflows into the rest of the 493. Something to pay attention to in 2026. It just means that we can broaden out our horizons. If we've been sitting on tremendous gains in AI-specific and tech-specific names over the past year, can we trim them and start allocating to certain other segments of the market that we talked about in Monday's video? I do still believe that yes, we can. And those institutional and retail inflows definitely show you the same thing. The rotation and the expansion of the market breadth is definitely underway. And that is everything for your news articles for the day. Now, let's jump into some charts. So moving into the good old S&P 500, after a pretty red day overall, we know we have to pay attention to the 2 remaining pieces of news this week, the Challenger jobs reports tomorrow, and of course the non-farm payrolls on Friday with the Supreme Court tariff kicker. That being said, we do still have a very nice uptrend, but it's been soft, right? It hasn't been this massive trend of expansion. It's largely just been grinding higher as we keep seeing, sector rotation over and over. That being said, line in the sand is down here 680, and we got a lot of space, right? We got support down here 683 to about 679. So I do believe that any further dips can still be buying opportunities if you know where to look. Special shout out to Monday's video again for the key themes and trades of 2026. It would be very long for me to talk about those every single video, guys. I'll bring them up when I can, but for now, we'll just stick to the broad market analysis Beautiful daily uptrend. The bulls are still in control, and the weekly as well. The bulls are still in control, although we are very tight up here at the highs, right? Your weekly higher lows are still set all the way down here at about 672. So there's a lot of room, right, to still tighten up and retest the 12 EMA on the weekly, and also retest our key area of support that we're just above right now. In my opinion, these news drivers in the next few days will move the markets in a large fashion. And if we see the good old expansion of the VIX as a byproduct of those news releases, it could be a very good opportunity, guys, to have your watch list in play, to be able to sell put options on some of your favorite companies, right? Writing put options. You guys know I do a lot of it on the channel, so keep that in mind. Top 5 options list that was derived on Sunday is still valid all the way through the end of the week. Moving on to the QQQs right now. Not too bad of a day, but still, right? If it wasn't for big tech, we'd be probably a lot lower today. That being said, still in a nice daily uptrend, breaking above our most recent higher low. This largely, though, on the weekly pattern is still some form of a tightening wedge right now. It's just a tightening range. It does look like a bull flag. The bulls have a lot of space here above our line in the sand level, 610, into support as well, 613 down to 605. Now, even if we lose this daily uptrend attempt, just focus on the weekly time frames. As long as you don't lose 600, it'll still be a big tightening up pattern right here. And we are still looking for the broadening out of the big tech trade. I don't know if it happens much before big tech earnings, which are slated to be at the end of January into early February, but something to keep in mind. Big tech, for the most part, has not been trending recently. You may just need some very good earnings results to kick off these big tech names into a higher gear, because as of recently, they have been fairly muted, but the weekly doesn't look bad, and the monthly is still somewhat in an awkward sideways consolidation. Moving on to financials right now. Financials having a bit of a retracement day. That being said, still a very nice daily uptrend. The most recent legs of that are these ones right here. So a lot of space above the higher lows, right? Anything above 54.35, just looking for a new higher low for further trend continuation. And even if you give that back a little bit and go into a daily downtrend, is it that big of a deal? No, the bulls are still in full control of this weekly expansion phase right now, looking pretty good. You would just be looking for a weekly higher low, and you got your previous all-time highs to kind of back test down here around the 54 mark. So still very healthy on the daily, the weekly, and even on the monthly, guys. Beautiful leg of monthly expansion. Still one of my favorite themes into 2026. There's multiple ways of playing this, right? We can either play the credit card companies that have done nothing for the past 7, 8, 9 months, but are looking great in terms of monthly momentum for continued breakout into 2026, such as Visa, such as MasterCard. The banks are good, although they are slightly extended right now on the daily and weekly timeframes, so please keep that in mind. And then companies like SPGI and Moody's Corporation, probably some of my favorite ones leading into this year as well. But even this sector that doesn't get talked about that much because it's somewhat boring, pay attention to insurance, man. Insurance is like a, dare I say, right, year and a half tightening up right here at the tops. Insurance could still be quite interesting into 2026. Moving into healthcare right now. Healthcare with a beautiful day led by pharmaceuticals and Eli Lilly. Gorgeous, gorgeous, gorgeous move in terms of the new daily uptrend right now. And you got a lot of space, anything above 153, looking for a new higher low upon any consolidation. Tons of space for them to do that. On the weekly, looking great. They tried to tighten up right here, and they got the breakout looking very strong, pushing new all-time highs on this healthcare sector. Congratulations to all of you that kind of followed us into that trade at some of your cycle lows. I don't believe these lows will be revisited anytime soon. Monthly breakout is in full effect, so nice to see healthcare is still very powerful and supporting the markets on days like today when it kind of needs it the most. Moving into semiconductors, everybody's favorite segment of the market right now. Daily uptrend, but still no participation from the big three, right? NVIDIA, I mean, decent day, but still no consistent trending breakout. Broadcom still stuck at its post-earning lows, and even a company like AMD, which is quite large, down. And even some of the memory names that were super hot yesterday, pulling back a little bit today. So we got to pay attention to this, and even some of your semiconductor equipment and materials companies that had a beautiful, beautiful start to the year. Companies like LRCX, right? They had a gorgeous start to the year. Applied Materials, very strong start to the year as well. Just a little bit of consolidation today. Still no big red flags, but any moves lower, looking for a daily higher low, anything above 360 on the SMH, looking for that higher low. Pay attention to some of the analog devices names that didn't get a lot of love in 2025. Pay attention to companies like Texas Instruments this year. Qualcomm, which also didn't get much love during 2025, and maybe some of the smaller names like MCHP or possibly ON, which are starting to break out a little bit here. One of the ones that I've been looking at more specifically is a company such as Marvell. I'm starting to play some short puts down here in the sub 80 range, but also not looking too bad for a potential range accumulation phase into a possible continuation of a gorgeous monthly uptrend into 2026. So there are still some opportunities across semiconductors. You just got to know where to look, which is the theme of 2026, right? The key of the best names of 2025 may not be the best names of 26. Maybe they will be, but I'm just here to say you got the broadening out trade happening, so you may as well kind of look around. Moving on to the Russell right now, not too bad of a day for the Russell, but still just trying to go for the extension here. Maybe the breakout and retest if we fall into those jobs reports later on during the week. 251 and a 248, still your support range. Looking for the big old breakout retest right here. This is one sector that I'm not playing as part of an ETF, but I am playing some of the individual components in terms of mid-cap names. Small and mid-cap names in the $1 to $10 billion range can do really well if you follow some of the key themes this year. Think of defense, think of energy, and think of software application layers for the phase 2 of the AI build-out, the efficiency layer, namely, right? That being said, the weekly looks pretty good for continuation of the breakout, and if they just get a little bit stuck here, you may just tighten up like the S&P and the Qs. That's pretty much everything for our broader market analysis right here. We will cover the rest of the sector breakdowns into the end of the week. We usually do that on Monday or Friday, but I did spend a whole bunch of time in Monday's video. I spent like 40 minutes on all of these different sectors and which ones I like the best in 2026 and how I'm playing them, whether I'm playing them in terms of a broad market ETF fashion or whether I'm picking up individual names. That being said, pay attention to the VIX as well, guys. The VIX may have a little bit of juice in it if we get unfavorable jobs reports. The only reason this one was up today was because of that jobs report this morning, right? The VIX didn't start off that hot, as a matter of fact, but then kind of cascaded higher into the end of the day, as you might just be seeing a little bit more protection being bought for the rest of the jobs report since the jolts did come in an unfavorable fashion. And we didn't talk about it too much, but the ADP wasn't a beat, right? Private employment came in at 41,000 versus 47. Now, that's not the negative print that we got last month, but still not besting the expectation. So just pay attention to this, right? It doesn't mean that the challenger jobs report is going to be super negative, nor the non-farm payrolls, but they're just a bit softer than expected. Once again, it's not going to be very conducive to further big gains on the indexes or maybe certain individual names over the course of those days. So just pay attention to that. Now moving on to our metals trades. Metals down a little bit on the Wednesday session. Nothing big here, but gold might just be doing something that we're expecting, right? That a really nice continuation of the daily uptrend right here. And then we kind of set the lower high right now. We're kind of losing our smaller term timeframes in terms of the hourly time frame and possibly the 4-hour time frame as well. If that does continue, they can set up a tightening range pattern, not as big as this one, right? But maybe something smaller, just like the S&P and the QQQs. There's 3 types of things, right? The uptrend, the downtrend, and the consolidation range. If gold just chooses to go for a more recent lower high, anything above 42.75, not looking too bad for that. On the weekly timeframes as well, you can see that even better. We're kind of struggling to push over and above as we do remain in overbought conditions right now on your RSI. But that being said, guys, gold is still looking healthy. Even if we do go for a bit more consolidation towards these lows, 4,200, a decent little backtest here of your weekly 12 EMA, and that 12 EMA has come up many times, close or actually to it over the course of the past year and a half. Not the worst consolidation in my opinion. And silver can pretty much have the same things happen to it, right? So bit of a slide on the Wednesday session. No red flags here though. Your support lows are still $70 roughly. Build a very nice base there. Went for the expansion, couldn't get it done. If we do indeed just tighten up here, it wouldn't be the worst thing in the world, right? Silver has done this many times, the tightening up of the ranges right here, consolidate before a next leg of breakout. So maybe that's what we're looking for. Pay attention to how they react. 74.51 if you do backtest this daily 12 EMA, because if you start losing that, then they may just be going for the larger retracement. Nobody wants to hear that, but even a pullback to your weekly 12 EMA, something that silver has done many, many, many times during this expansion phase would not be so awkward. If anything, it would give you guys better entry points if you are looking to play the larger swings on silver throughout the rest of the year. I'm still fairly bullish on the metals over the course of this year, but it may just not be straight line expansion, nor maybe as rapid expansion as this most recent phase has been. I'm not saying it's not going to go up. I'm just saying that perhaps thinking that it goes up this rapidly, right, through the entire year, and that silver has another 150% year, it might happen, but it might also just be wishful thinking, right? The risk to reward profile up here is definitely not as attractive as it was down there in the mid 30s. You must understand. Moving on to Bitcoin and crypto right now. Crypto also not having a good day. As I said, broad market, broad asset sell-off today. Not many things were safe. All the metals were down, and even crypto and even the rest of the market as well. So crypto not being spared today, still trying to set a new daily higher low, anything above 86,000, looking for that daily higher low. And crypto, I've talked about this many times, right? Like, there's just so much institutional support in crypto right now, so much institutional positioning as well. Crypto will move not on its own anymore. Crypto will largely move as a byproduct of the overall market. Now, we have seen certain segments of the market expand in terms of risk on moves, right? Certain high beta names, but crypto has not gotten the same love over the course of the past 2-3 months or so. So keep that in mind. Although it is a nice daily uptrend attempt, we still have not reversed the weekly. You need a break and hold above 94.7 for that to really manifest into a weekly uptrend and give you guys a true monthly bottom. As of right now, we are still just consolidating. I need to see that break and hold above 95,000 to really give me conviction that a big portion of your monthly sell-offs are done. But as I said, this one will move with the S&P and the QQQs. You don't get big expansion on the indexes. You shouldn't be expecting big expansion in crypto either. They will move largely together with some beta variance, of course, right? But still, you guys get what I mean. Ethereum, decent push higher, a little bit of a consolidation move here, anything above 2,900, looking for a new higher low and try to expand this trend a little bit more. Same concept as Bitcoin, right? Until you guarantee me the weekly uptrend, we cannot say that this is a trending market again. It's just an awkward consolidation phase between 3,200 and 2,800. So the way to play Ethereum and Bitcoin, in my opinion, is the exact same. We're either trading with stop losses below our most recent lows and going for the upswing into relevant resistance ranges, right? Or you're playing this one for the long term, playing the accumulation game, going for the long-term thesis. In my opinion, there's no other types of trades to be had right there. And that's everything for your broad market rundown. Now let's move into big tech, and then we'll get into the biggest gainers and losers. So first things first, moving on into Apple. Apple down about 0.77%, quickly approaching my target area of interest. Now we know that Apple, it trades very rich, right? Around 270, we're at a 33 forward PE, a 3.19 peg. So on a stock that trades rich like this, you cannot afford to have poor entries. You have to be very patient. We've been saying on the channel that the possible entry location is your infamous monthly 12 EMA. Previous resistance highs will be newfound support lows. And right now, off the highs, we're currently down about 10%. Come down into the 12, that'll be a 15% sell-off from the highs. A more interesting location to pick up Apple. So daily downtrend is maintained, coming into support. And if my RSI would load, I don't know why it's not loading. Give me a second. There we go. We got the RSI. As you can see, it's approaching daily oversold conditions. So a little bit more, and you will find me probably writing some short puts on Apple and maybe looking for some swing trade positions at these lows. I don't know if Apple's going to be able to recover much of this, maybe before its earnings, which is happening in the next 2 weeks. But maybe if we come down into here, consolidate before earnings, it could give us some nice opportunities. Moving on next into AMD. So AMD also somewhat soft, right? Even though they had a very nice CES conference, the stock just not doing much of anything right now. So sadly, they try to go for the daily uptrend breakout, undercut the lows again, so we're once again back to the very wide range of gulag. It's like a 10% range, right? 220 down to roughly 200. The way that I'm playing this one again is just with monthly consolidation. Monthly timeframes, guys, will help you a lot in your analysis. If you're confused by the daily and weekly price action, just understand what's at play right here. Still monthly consolidation after a massive move expansion. The way that I'm playing AMD is either accumulating more shares in the lower 200 range for the possible expansion of the long-term thesis. Around 200, it's trading at a very low under 1 peg, which is very solid, and a mid-7s price to sales. And on any big red volatility days, I will be selling some put options down here, 190 and below. Moving on to Amazon right now. Amazon, decent day, but unable to hold up those highs. Very strong and then kind of unwound into the end portion of the afternoon. Amazon was up at 1.1.5% today, almost. and then sadly gave it all back. But nice little daily uptrend breaking above the resistance range. And this resistance range has been a big one, right? 239 to 227. Need the weekly candle close if you guys want me to change this box into a big green beautiful box of support. That being said, if you falter a little bit more, it'll give us some really nice opportunities to further accumulate Amazon and maybe sell some more put options down there mid 220s. I love Amazon, probably one of my favorite stocks in terms of big tech leading into 2026. Monthly is still looking good for some expansion perhaps, and the multiple is fairly attractive down here at around the 220 range. So if we do pull back there under 230, it might just be one of our last buying opportunities for 2026. They have earnings as well coming up at the end of the month. Moving on to Google right now. Google up 2.5% today. Very strong push, but still no new all-time highs. Getting very close though, right? Beautiful daily uptrend by Google right now, but we know that multiple timeframes are still extended, so it's a very tough proposition to be buying Google up here. I've been very clear on this since about the 240 range, right? Google, for me at this point, is a hold. The accumulation period was back here, arguably not up here. Weekly RSI remains very high. Monthly RSI remains very high. So what I'm saying is that there's not much risk to reward up here. Can we afford to hold with a very cheap cost basis? Absolutely. But should we be adding up here? Possibly not, right? The valuation of Google usually oscillates between 20 and 34 price to earnings, and you're at the top end of the range right now, and even the PEG ratio is trending towards 2. So Google, very high quality company. I think they'll do well in 2026, but positioning up here is very greedy in my opinion. Moving on to Meta right now. Meta down about 2% today for no reason whatsoever overall. That being said, we're still trapped. We've been trapped here, guys, since December, right? Been a month of consolidation of doing a whole lot of nothing. So support stays the same, 643 down to 629. This area down here is a nice accumulation range for long-term Meta shares. Around 630, you're at a low 20s multiple and a 1.63 peg. This is attractive risk to reward, in my humble opinion, and also an attractive monthly retracement. As we know, we're just in the context of a monthly higher low in around the 12 EMA. So here, all the way through low 600s is my accumulation range for Meta, for either leap call options deep into 2027 or possibly just shares. But as of right now, trendless as we just consolidate sideways. Moving on to Microsoft right now. Microsoft was up 2% today and gave half of it back into the end of the afternoon, as many different companies did. But you can see they tried their hand. And look, the great wall of resistance once again coming into effect. 500 down to about 490 is the great wall of resistance. And right now, same as Meta. We are trendless, which is why I say, I don't know if these big tech companies have the juice to mount above some of their levels before they have earnings end of the month or early into February. You might just be looking for more extended consolidation. Now, if you're looking to accumulate Microsoft for the long term, not a bad area, right? In around 470 or right around there, right? Trading under a 30 forward PE, a 1.66 peg, which is very attractive. And you are in this monthly consolidation phase that we've been very patiently waiting for. So Microsoft is a few key things for me. I don't mind leaps here, deep 2027 expiries. I don't mind accumulating some shares. And every time we kind of test these 470 lows, you will find me writing longer dated short puts, 460 strikes or better. Moving on down to Netflix. Netflix, we had some news today as we just presented, right? That the fact that Warner Brothers rejected Paramount's offer, but it didn't really help Netflix's stock. Still plagued, still very noisy, and still into consolidation. Daily downtrend still in motion for Netflix right here. And if we can't stop the bleeding, we are weekly oversold conditions, right? But if we cannot stop the bleeding, the bears are very, very strong. A lot of momentum right here. First things first, if you want to see Netflix actually come alive, well, number one, you kind of got to give me a break above this 12 daily EMA, right? We haven't had that since November. It's been almost 2 months of just straight daily downtrend and straight soft momentum. That being said, it possibly is going to turn around soon. It has not gotten this weekly oversold in a very long time. The last 2 times that that's happened on this chart, well, you can see that has been in around the local bottoms. So I do anticipate that this is the same thing, but you might need to be a little bit more patient because step number one, as always, gotta give me the daily uptrend. Then that daily uptrend needs to translate into a nice weekly bounce and give me the weekly uptrend. And then only then can we say monthly consolidation is finished. But the entire time it is in monthly consolidation. In my opinion, great buy on Netflix down here, 90 through mid 80s, the bottom end of the next support area, decent valuation and decent forward prospects for the company. There is nothing wrong with this company at all. Their earnings are still great. It just got dragged down with the sentiment since this Warner Brothers Discovery deal has been making the headlines for the past 2 months. Moving on to NVIDIA right now. NVIDIA, nice 1% day, but still inside bar Again, for the past like 2 weeks, NVIDIA's just been stuck here. Decent price, but still stuck. Trendless, right? The bulls are trying to go for the daily uptrend breakout. At this point in time, you want to see that, you got to break above 193. If you just pull back, decent support here. It is a very big level, 185 down to about 180. Super strong, big prior resistance, support, resistance, and now possibly support as well. Looking for the breakout retest trade potentially on NVIDIA. No red flags for NVIDIA right now. Matter of fact, it's looking very good, especially with NVIDIA's guidance that we gave yesterday, right? Overall, they're increasing their guidance. Their previously established guidance of $500 billion over the course of the next 5-6 quarters, that has been increased again. And if you watch the CES presentations from Jensen Huang on Monday, you would also know that they're working on very attractive things for the near-term future. So NVIDIA looking very strong right now, still a decent area to be accumulating some shares if you want to go for the next leg of upside on NVIDIA. No, I'm not saying that the upside is going to be as good as people who bought down here in 55, but can we see NVIDIA into the mid 200s throughout 2026? I do believe that the valuation does allow for that expansion. Right now, trading at a very fair low multiple in relation to past times. Moving on to Tesla right now. Tesla down about 0.36%. Big sell-off here on Tesla since reaching those $500 highs earlier in the month of December. Now, that being said, guys, pay attention. Coming to support right now, 427 down about 416. Big prior support, resistance for a while, and support again. So pay attention to see how we backtest this location, right? The weekly downtrend, expansion phase, you're looking for your weekly higher low, but the bulls need to play some defense here, right? You need it. As of right now, still just monthly consolidation, right? Bit of a bull flag forming up here. So this area, this whole little pocket, right? 430 down to about 400, this $30 range right there, that's the area where you need to see the bulls play some big defense as this 12-month EMA catches up. Tesla obviously has many things going for it this year. Number one, robotics. Number two, obviously, is going to be FSD. But number three, something that people don't talk about, is energy. Tesla deploying a ton of energy, and the grid desperately needs it over the course of 2026. Those are the things you need to pay attention to, not so much the short-term narratives for the car business, although they do matter for short-term cash flows and short-term margins. You got to pay attention to the long-term expansion positives for FSD, robotics, and obviously their solar and energy business. Moving on to Palantir right now. Palantir up 1.10%. Not the worst day, up a little bit more in the after hours after this piece of news right here, right? The defense money, obviously, right? And Palantir will probably be a recipient of more government contracts. That being said, Palantir also hasn't done anything. We're still stuck here, right? 186 down to 170. There's been some breakouts, there's been some breakdowns, but most of your price action since August has been within the confines of this 185 down to 170 range. Now, this is somewhat good. If a stock consolidates sideways while printing better and better earnings, the valuation gets progressively cheaper, but I mean, it's going to take a long time for Palantir to actually become cheap again, but not too bad, right? It's just very choppy price action. If you somehow break down with the jobs reports, you will probably find me selling some put options down here, but I'm not building any swing trade longs or call option longs on Palantir. I don't think it is the best risk to reward in the market. Very strong company, but this one remains a hold for me. Any ads in terms of shares up here have to be done with a 5-year thesis minimum to justify these valuations, but very strong company nevertheless. You'll never really hear me saying anything bad about Palantir other than its current valuation. This is really a unicorn company, right? Moving on to SOFI right now. SOFI, not a bad day, but still, suffering from yesterday's consequences of those double downgrades from Bank of America and Goldman Sachs. Perfect opportunity still to be exploring the potential of selling some put options down here in the low 25 range. Kind of trendless, right? I mean, they're trying to protect these lows down here at 26. We'll see if they have it in the tank to go for this resistance range again, but it's a big one, right? 30 up to 28 is a very large resistance range. And for the past 3-4 months at this point in time, we've just been stuck here. But being stuck is not the worst, right? The company doesn't have any problems in terms of earnings or something like that. No, it's just after the stock has printed literally a 3-4x in like 6 months, it's just monthly consolidation. So I want to be making the most of these monthly consolidation phases. And there's a few ways that we can do that. If we're still very bullish on the stock and we want to increase our position sizes, well, 27, not that bad of a valuation if you're looking for the next leg higher on SOFI throughout 2026, or we can sell some put options, just farming some premium into this very logical location, prior resistance, current support, and the 12-month EMA curling up. So this is a very attractive premium farming location, and I will continue to do so. Moving on to Uber right now. Uber up about 0.76%, but encountering its own great wall of resistance. 91 down about 87, the same area that took the bulls out back in early December, reacting at resistance again and battling with this green line, which is your 200-day moving average. Now, nice pop off the lows, brand new daily uptrend, that's for sure. So any move lower, looking for a new higher low, anything above 79.82, higher low, and maybe making an attempt for it again. That's if they can't get it done in one clean shot. Going to be challenging to cut through this area in one clean shot, especially since we don't have the higher time frames, right? We don't have the weekly uptrend, that's for sure. And they made some nice progress. Now you got to keep reversing the time frames, right? You got to keep this daily uptrend going. Then you got to put in the weekly higher lows, get the weekly uptrend back, and only then can you say, all right, my monthly lows are actually set. For the time being, if Uber retraces a little bit more, I will remind you, selling some put options down here is my go-to strategy. And if we wanted to nibble on further shares of Uber, the lower 80s do present a decent valuation metric for the business. And last but not least, Taiwan Semiconductor pulling down from its recent highs of 333. That being said, very clear chart pattern setup in my opinion, right? Continuation of this massive expansion phase of the market. You're just looking for the breakout retest, right? The retest of where? Well, this little red box, which was previous resistance, which should be acting as support, 310 down to about 300 psychological. So pay attention to that. If TSM comes down a little bit, it would just be very normal price action. Beautiful weekly leg of expansion. So if we're exploring any swing trade longs, this is probably the area to do it. Resistance into support and 12 weekly EMA curling up. On the monthly, it's still very extended, which means that I can't really build some very massive leap call positions, but perhaps swing trading from level to level could be the way to play this one on TSM. As per long-term portfolio shares, I'm just holding, not that the valuation is bad, at 320, right? The PEG ratio is still very decent. Price to sales is very decent. We know they have a lot of pricing power. They're increasing prices every year for the next 3 years because they can do it, right? But the stock obviously has a bunch of geopolitical risk with the whole China and Taiwan situation. That's not new. They've had it for years and years and years at this point in time. Still one of my favorite companies in the entire market. If you can look beyond those risks, I'm holding every single share, not selling, but I'm also not really adding any TSM up here. And that does it for your overall broad market review. Hopefully you guys enjoyed. Now, let's get into some of the fun stuff. Biggest gainers and losers of the day. All right, so starting off with some of the biggest losers and the themes, right? So ASTS and Rocket Lab pulling back in a big fashion, but they had a great start to the year. Now, I'm very clear on these ones, right? Rocket Lab or ASTS. If you're buying these ones, you're buying these ones for the long-term thesis. The risk reward is definitely not there in my opinion, not anymore. The last time we said that Rocket Lab was a buy was down here at 42. At 84, it's a bit of a stretch. If you're buying this one, you're buying it for the long-term mini SpaceX thesis. I'll remind you, you got to pay attention to the Neutron rocket launches throughout this year. Definitely not the best risk reward, and I'm not buying up here, nor am I really buying a company like ASTS, even though they have a very nice competition to Starlink in their Constellation, right? That being said, the best risk reward was down here at about 52, a bit too extended for me. So these ones are holds for long-term theses, but very tough to build a new position up here. A company like Open Door, I mean, we haven't talked about this one for a while, but this trade, I don't even know if anybody is still playing this one. It was all the rage back in, September and August type of thing. But since then, it's kind of tapered off. If you want to know what plays I'm looking at in terms of real estate specifically, I'm looking at mortgage companies, more specifically Rocket Mortgage being my favorite one, and possibly a little bit of a kicker in the home builders trade. Home builders, I would probably be playing through the ETF as we're just looking for a continued monthly expansion for the broadening out of the real estate thesis. But keep in mind, the real estate thesis is a slow thesis, but one that you should probably pay attention to into 2026 and into 2027 as the administration seems keen on taking certain measures to provide affordability in terms of housing, such as headlines that we had today. So please keep that in mind. Moving on a little bit further here, FSLR solar with a bit of a downgrade today. FSLR would be a revisit for me in the lower 200s where the valuation is not that bad, but there's several ways to play solar. My one is TE Energy, this small little company right here, vertically integrated solar provider for the United States. And we know with this administration, it's pretty much USA all the way for everything. So vertically integrated companies that have their entire production process located in the United States will probably be some of our favorite plays. So T Energy, something nice for solar. If we get a back test down here, back into the $6 to $4 range, that's where I'm playing. Not a bad buy still up here in terms of possible further upside. Very popular name on Twitter. You might remember me building the position down here $4 to $3. I don't know if we're going to revisit that area, but if you get rejected in this resistance range and we revisit down there, maybe we can use short puts to possibly guarantee an entry if it comes lower than about $6. So paying attention heavily to that one. Moving on a little bit further, some of the energy names and utilities down a lot today overall. That being said, Vistra is a very nice opportunity coming down here into the 145 range. You might remember me saying that 160-ish under the 12 was the area to possibly start building positions if you're looking for energy exposure through a name like this, through the 26 EMA, but also other pure players of energy in terms of names like Constellation. Just look for the back tests of large EMAs, something like a Constellation Energy Corporation for nuclear and things like that. Many different ways to play energy this year through either utilities or natural gas, right? Or names like Bloom Energy as well. Bloom Energy probably going to be a very hot player into 2026. We're just consolidating right now. Decent valuations still to go for some upside on Bloom Energy. Sure, you're not getting the best cost basis, but could be still a nice winner. And then we can talk about stocks like FLMC and EOSC, which are also probably poised to have a decent year, as we know the energy requirements for these data centers are quite massive. So themes this year, guys, energy, big theme that I'm playing, depending on in certain respective parts. And also some of the defense corporations, military defense is going to be another key theme, and software application layers for AI. Now, big tech and the data center build out, names like, the CIFRs of the world, the NBISs of the world, the IRENs of the world, things of that nature, still very attractive locations right now for accumulation for the eventual next leg higher. But I'll just remind you this chart that I bring up almost every video on Oracle, right? We had the big funding period, right? Which was this big move right here. All the money being thrown around, right? From big tech towards these data center builders. That was the build out. That was the funding layer. Now you're in the execution layer before the deep 2026, early 2027 thesis, which is when the data centers are actually built and generating possibly very sizable amounts of revenue. This is now the execution layer. So this should be the area in which you're looking to rebuild some positions or build new positions. So keep that in mind if you're interested for anything like CFR or, possibly the APLDs of the world, et cetera, et cetera, et cetera. So I figured I should cover that theme again, right? Other names like Blackstone, perhaps, which is down on the lows today. This one is a short put play for me down here, 139. Pay attention as well to this company right here, Brookfield, energy player, but more than that, right? Brookfield has arms in so many different aspects, whether it's real estate or energy endeavors or whatnot. Brookfield could be a very interesting play if we kind of revisit these lower 40s. Not a bad location as well. Figured I should just bring it up. BX maybe think about it because it's a 2-ticker symbol that starts with the letter B, but just kind of throwing the plays out there for people who are interested. Ondas, very interesting play, but not at these levels right now. Arguably, the revenue run rate is a little bit soft to warrant a $4.6 billion valuation, but there are other plays. There are other plays all over the place. Names like OSS, which were up absolutely massively today, $22 billion. It's only a $200 million company, right? More manageable entries, in my opinion. But then we can talk about all the companies that have been running super hot in terms of military recently. AVAV, looking for the most recent, looking for a higher low, possibly down here. 270 again for the back test, but also some of your legacy players like Lockheed Martin coming back into a massive support area. Interesting player there as well. So there are opportunities all over the board. You don't have to focus on the absolute purest meme stocks, especially if the valuation has kind of run away from you. You can explore other different plays if you so choose. Moving on a little bit further down the list here, is there anything else? I mean, Caterpillar is just way too extended. Maybe some people would ask me about this one, but you guys know the drill. Always go to the monthly timeframes. If it's too extended from the 12, I know the generators, I know the possible applications for the data center sets, but overall, guys, it's just way too extended for me, right? Caterpillar doing many different things, but another interesting company though, John Deere, right? John Deere, perhaps. This company's not for everybody, but it's a financing play. Rates coming down, et cetera. It's been consolidating. Hasn't really moved for a better part of 2025, right? Still kind of stuck here. So John Deere, 460 down to the support, 420. Not a bad play. This is a no recession / rates coming down / financing into more sales. You're going to find a lot of this style of company, right? In terms of companies that had big pull forwards of demand through the pandemic years at 0% rates that now have had a normalization of sales. And now we're looking to possibly rebuild EPS and sales over the next few years. So we're at cyclical troughs on many of these companies where financing is a big key element. So keep that in mind as well as you're playing these. I mean, I guess we could talk about Robinhood perhaps. Robinhood for me is like low 100s. You're never going to get the good risk reward as people back here or down here got. But the next interesting area for me to maybe write some options or look for some tentative swing trades would be down here, possibly in the lower 100s. Nothing there for me right now. CP, shout out to CP guys. Big support range down here, 70 down to about $68 for those of you guys looking for value plays out there, right? It's a 4-year range, all while this company has been improving its fundamentals. Not bad. Railroads could be some interesting plays here into 2026 overall. And I think that covers a lot of the key themes. I mean, of course, we could talk about consumer retail, right? Some names like Nike, some names like Decker's Outdoor Brands, some names like Lululemon, because I know a lot of you guys enjoy consumer retail, but I don't play consumer retail like that. Not that it's just not my favorite way of playing consumer retail, right? If I'm looking to play consumer retail into this year with the no recession thesis, the broadening out of the K-shaped economy thesis, the lowering of interest rates into more consumer discretionary spending thesis, I'm not going to go for individual companies. If anything, I'll go for an ETF like XRT, just to be sure that I don't pick the wrong company with execution problems. I am playing certain small companies in terms of consumer discretionary, like Elf Beauty, where I do believe the risk reward is still very prevalent and they're an industry leader, but I'm playing it because of the business model, right? Same can be said about companies like TJX. I would play TJX for the business model. I would play Louis Vuitton, not because it's one company, no, because it's a business model. It's a conglomerate of 75 different luxury brands. I would play this one, or I would just play broad market things. Names like Affirm. That's all of consumer discretionary spending. Names like Visa and MasterCard, that is all of consumer discretionary spending through volume increases of payments overall, or just broad market names like Amazon with their massive consumer e-commerce business. So I'm not here to say that you can't maybe find some alpha across various names, in consumer retail like Nike or Lululemon or things like that. But it's just not the way that I personally want to play it. If you guys want to play it that way, I wish you guys the best of luck, but I'll be keeping it a bit more broad in terms of the ways that I choose to play. Even some of the travel names, right? I'm not going to go for the airline specifically like AAL or UAL or the cruise line specifically. No, I'll go for large travel operators such as Airbnb, large travel operators such as booking.com, right? So everything, whenever you guys think of me playing consumer retail, I will keep it a little bit broad. It doesn't mean that there aren't some possible good opportunities in terms of risk reward. That's just how I'm willing to play it this year. So I think we've covered a lot of the segments of the market that were down and the narratives associated with them. Obviously, I could spend 2 hours going through this entire list, but that's not the point, right? The point is to talk about the general themes, just so you guys know where we can kind of go with this. Now, in terms of the names to the upside today, Credo, tradable bottom has been now set. 125, stop loss lows, possibly looking for the upswing here. Monthly, back testing and support, almost the 12 EMA overall. Now, this one came down in large part after earnings because of some reports that in Amazon's data centers, the colors of the cables weren't Credo's colors. Yes, that's how simple it was, right? And as a result, people thought that Credo lost a massive customer. That report was since dispelled today and even yesterday by a Mizuho analyst and several people who noticed, and even Credo said a little bit something about this, that they can do custom colors for their cable covers. So no, perhaps they haven't lost Amazon as a customer. Yeah, that's how kind of crazy these plays can be, right? But after a 35% drawdown into arguably very close to the 200-day EMA, 12-month EMA as well, and a big engulfing day with tons of volume like today, this one could be interesting maybe for a revisit in terms of swing trades back to possibly the highs. Something to pay attention to overall. It's hit my criteria, right? Nice, decent pullbacks, fantastic revenue growth metrics. So that's not a problem, right? You always want to look for that explosive revenue and EPS growth for some of these companies. That's what really gives you the lift. You know what I mean? So just pay attention to that one moving forward. CLH, I mean, we've talked about this one many times on the channel. CLH is okay, I guess, for consumer retail. But at the end of the day, guys, it is just an energy drink company, right? It's like, I want to go more broad than that. You know what I mean? But of course, CLH, not the worst proposition here at $51. The valuation is not the worst, but I do think they've largely come in to their market share peak right now for this brand. So I know there's a lot of people in this one. I don't want to talk too negatively about this one either, but are they going to have the explosive growth that they had in the past? No. And we covered that, right? Most of this revenue growth comes from their acquisition of Alani. not because of the actual Celsius brand, but still, right, not the worst risk reward proposition in the markets right now. And some of the buy now, pay later names, right? Klarna off the lows today. I don't know what Sezzle is doing, but we can take a look at that one too. Sezzle, a nice day as well. My favorite player in the entire niche right there is Affirm. I think Affirm has the best client growth right now. I think they have the best default metrics as well in terms of people who don't pay. I just think they have the better pipeline. So my play is going to be Affirm. Shout out to the other ones though. And then we got to talk about cybersecurity as well. Cybersecurity with a bit of a resurgence, but it's going to take a lot more than this. Just something to pay attention to, right? It's been daily downtrends this entire time. It's been weekly downtrends, and cybersecurity overall has just been in big monthly consolidation. But maybe we are nearing closer to the end of monthly consolidation than we are to the beginning or the middle of it, right? Big moves, Palo Alto Networks off the support lows. Interesting. Cloudflare as well, right? That's not Cloudflare. Cloudflare as well, establishing some form of local lows. Interesting. Pay attention to it. Datadog, same concept, right? Establishing some form of support lows. Big reaction day off these lows today. And other players within the niche as well. Zscaler, nothing but big drops. In daily oversold, you got to pay attention to sometimes these engulfing moves with higher volumes than normal after coming into close to a support region and big monthly consolidation. Maybe, just maybe, I mean, my two plays that I'm looking at is Rubrik for the exact same reason. They've already bottomed out, and a small little player, Sentinel-1 at these lows, but there's many ways to play cybersecurity, so just pay attention to it. Cyber has been very soft for the past few months. Maybe rotation back into the sector could be something to pay attention to moving forward. And the next one we'll talk about is UiPath. UiPath is a position that I've built some pretty decent size into prior to earnings, and then most recently since earnings in this consolidation phase as well. Pay attention to it, guys, right? Monthly, looking good for the uptrend. It is also a mid cap, right? Under $10 billion. The future looks pretty bright for UiPath, and it is one of my favorite application layer software plays, pure AI play for this one overall for software. I'm not playing enterprise resource software this year, guys. I'm not playing it. I'm not playing the CRMs of the world, the Monday.coms of the world, the ServiceNows of the world. No, I'm not playing those, but I am starting to look for pure AI plays in the software layer, which is the second order of the AI trade overall. So keep all of that in mind. We've covered some of the key themes that were noticeable to us today. Right? Sure, I'm skipping over some names, but as I said, the goal is to just cover the broad themes that we should be paying attention to and any trend shifts or any notable shifts. See, like cybersecurity is somewhat of a notable shift today versus the price action of the last few months. So we got to talk about it, right? And some of the other defense corporations or other energy players that were down today, we got to talk about why and where they're going and are they still good. So hopefully I've done a good job of covering some of the main key themes in the markets today. And that's it for today's video. So hopefully you guys enjoyed today's video. If you did, would really appreciate it if you dropped a like on the video. Helps me grow the channel, almost close to 12,000 subscribers. If we can grow this channel even more this year, I'll be super happy. I love you guys either way. Thank you so much for all your support so far. If you want to subscribe to the channel and want to see more of these videos, we cover these market recaps every Monday through Friday after the close. Hopefully I get to see you back here. And last but not least, if you have any questions, feel free to leave them down below in the comment section tonight. I'll try to get to everybody's comments tonight over the past few days. I know I've skipped a few comments. I'll try to do my best to answer all of those over the course of this evening after this video is published. And last but not least, guys, if you were tired of trading and investing in the markets all by yourself, you might consider doing so as part of our trading and investing community of over 300 members right now, where we talk about the key themes of the markets and try to identify the best possible trades in any given day, or identify the longer form swing trades with these themes that can be very popular for this year. Now, as part of the Discord, you also get access to my real-time trades, right? Anything that I'm building in terms of accumulation for shares, or possibly weekly wheel trades or longer form wheel trades using short puts for entry. That's a big portion of our week-to-week trading. You also get access to my leap call contracts that I buy. As I said, my longer form buys for my longer term portfolios as well. Whatever I do in the markets, you guys get the alerts in real time. Our members have been having tremendous success since we've launched Discord so far. You also get access to our private video section, where I have over 15 hours of educational content on how to build long-term portfolios, how to build trading portfolios, how do I do fundamental and technical analysis, my various trading strategies, right? For call debit spreads, leaps, things of that nature, different wheel variant strategies. All of my educational content that I will never put on YouTube is in that section right there for our Discord members. You also get access to our private morning live streams Monday to Friday, where I trade the markets at the open for about 2 hours, 2 hours and a half. I'm with you guys, streaming live, trading live, and taking all your questions on your stocks, your options, and your long-term portfolios, and also key questions on themes and various positions that people bring to me, of course, right? That being said, you also get access to all of my watch lists and all of my charts as well. Whenever you see these charts with support resistance levels, whenever you see these charts with fundamental breakdowns, you guys get to copy paste all of them. Whenever you see these levels and these fundamental breakdowns on hundreds of companies in the market, you can just copy paste everything. It literally takes 15 seconds, couple clicks of a button, and all of the charts and all the watch lists become yours. Just an added benefit of being a Discord member. And you also get to have a lot of fun with us in there on a daily basis. So if any of that sounds good to you, the link to join us in the community is down below in the video description. Hopefully I get to see a few more of you in there with us for 2026. And if not, I guess I will see you guys right back here on the channel. That's it for me. Take care. Hope you guys have a great day in the markets tomorrow. I will see you tomorrow after the close. Peace.